Joseph here from ACAB. Welcome to today's update. So, it really is quite amazing what a week can do. So, we've started a new month and we've seen a very different type of market than what we've been seeing recently. Even just a few days ago, back into September. So, just looking at the US30 here, we obviously saw that one day up, but we've seen so many strong moves down as inflation, recession, and rates continue to be a real key factor for markets. But yeah, we this week has been quite extraordinary, hasn't it? From the opening, from the previous day's bar to yesterday's session, we've seen just a massive buying, and we've seen some trend lines starting to break now. And we've also seen a small change, not so much in US inflation and rates, but in Australia, we saw interest rates come in lower than expected, increasing by quarter of a percent as opposed to 0.5%. And it did give a bit of a shock to the market. The ASX 200 really bounced really nicely off a support area. But we want to just continue to talk about US30, and we are sorry, we have also seen a very strong move lower on the USD, and this is all getting a little bit interesting. We are still seeing warnings that from the UN, they're saying that the world is on the brink of a recession. Developing nations could bear the brunt of that. We're hearing also comments that Morgan Stanley aren't saying that this is a bottom just yet. They want to see a few things occur before that could be starting to be called. I tend to agree with that. If we just look back here, we can see the market is still in a pretty decent downtrend, and you're always going to have counter rallies in the downtrend. We saw one here, and we're seeing one now. The difference maybe is basically just the aggression and the sheer volume that we're seeing in these last 2 days of buying. But we definitely do need to see a little bit more evidence before we'd start to call a bottom. Now, did see a similar pattern back in 2020 after after COVID really hit the scene and caused that market panic. We did see some real strong moves up. Then we saw a very shallow high low, and the break did set up that rally that we all remember from 2020 to 21. Definitely not saying that that is a case that could happen here, but what I am saying is that we do have to remember history, and we do have to take it on board, and we can't get too emotionally attached to any type of market, whether it's up or down. We have to be flexible, and we have to be looking at the picture as it changes. So we can see a resistance break here on yesterday's key move higher. So what I'm really looking for at the moment is the next strong move down, and if we do get that higher low and then a break at the high, is that going to be the evidence that we need to sort of suggest that a new short to medium term trend is underway? And if we don't see that higher low, if we do see some big bars lower like that, followed by new lower lows, that would be a warning sign for me. And whether it is for you or not, that depends on how you look at the markets. But definitely, if we did see a sharp pullback with new lower lows, that would be a big warning. But if we do see a higher low, and we do see a new rally that breaks the previous high, it could be definitely telling us that buyers are, starting to get back in control of the market, and that we could see, a short-term trend develop into possibly a medium-term uptrend. So that's some of the things I'm thinking about right now and watching on the US30. But we need to check into this week's US employment data and see if that does help push the current projection further, or if it does cause some issues in some of the buy momentum that we're seeing now. So that's it for today's report. We thank you very much for tuning in. We do have midweek seminars being run, and we have our trade zone seminars and reports during the week, so please tune into them. And again, thanks for your time. We wish you all the best for your trading, and bye for now.